Kevin, thank you so much for joining us. I'm sure a very, very busy day for those in your sector. Now, before today's MPC meeting, the speculation amongst economists was not whether the repo rate would be cut, but by how much. What have you made of this decision?
So from my perspective, I think it was the right decision. There was some debate, I guess, going into it, whether the Reserve Bank would cut only, say, 0.25% or whether they would even go to another 100 basis points. I think 50 basis points in the end, the right decision. Also, critically, when you look at how they made up that decision, what they're saying is that two members only wanted a cut of 0.25%, in other words, 25 basis points. So clearly the MPC was a little bit divided as to what was the appropriate measure. In the end, 50 basis points, half a cut. It comes on the back of the previous cut. So for the year in total, we're down 2.75%, 275 basis points. That's clearly going to provide significant relief for households and for businesses who have substantial debt. It's not as if this is going to lead to a pickup in activity. It's not going to do that. People aren't going to rush out and buy cars and houses, not when you're in lockdown, so it doesn't have that effect. But what it will do, importantly, is just ease some of the pressure that households and businesses are currently facing.
Now, Kevin, as you just said there, members of the MPC weren't all singing from the same hymn sheet. Everybody had their opinions on the direction that should be taken. But the same goes for economists from different sectors. Some is hoping for a more aggressive cut, as it would put more cash into households to stimulate consumption. And it would do so faster, in their opinion. Was the governor taking the marathon, not a sprint approach to the economy's battle with the coronavirus crisis?
Look, I think the Reserve Bank has a tough decision to make during this time. I think they've been fairly aggressive as it is. If you look at the last two interest rates cuts, those were 100 basis points each. So I think they have shown a degree of aggression in terms of reducing rates. I can understand people expecting or hoping more rate cuts. When you look at many other countries around the world, they've responded even more aggressively. We've seen many countries take interest rates almost to zero, or in fact to zero. I think in South Africa's case, that it has to be balanced. It's not as if we can afford to take interest rates down that far. Ultimately, we've still got to attract foreign investment. We're still very reliant on getting foreign money into South Africa. And it's clear that some of that money arrives in South Africa because we offer them a better interest rate than what they can get internationally. So from that perspective, we can't afford to be overly aggressive. I think the inflation rate allows for the cuts. I think the growth rate allows us to cut rates. It's possible the Reserve Bank will cut interest rates a little bit more, but I would say from the statement today and the way in which they made the decision, we're getting close to the bottom end of the rate cut for the moment, and I think it's appropriate. I think it will do what it's intended to do.
Now, we saw the rand weaken as the focus turned towards this expected announcement today. That, of course, after quite a few weeks of a high on the back of those US-China trade war concerns. But it's now since strengthened just in the last 40 minutes or so since the announcement. What should we be reading into the movement with the rand over the coming days and indeed weeks?
So if you look at the currency, obviously, if we'd cut interest rates way more aggressively, let's say that we'd cut interest rates 100 basis points, that would have probably resulted in the currency coming under pressure, because clearly then we're not offering foreigners quite the same return. And so by only cutting 50 basis points, in effect, we are supporting the currency a little bit. And I think that is important. We can't afford for the rand to just keep weakening. Ultimately, we are very import intensive in this country. A lot of our technology, a lot of our goods, we still import. And so if the currency remains exceptionally weak, we either can't afford those imports or we result in much higher prices domestically. So I think the Reserve Bank, it's demonstrating that balance, and I think they're getting the balance more or less right. And the fact that the rand did strengthen a little bit is reflecting the fact that the Reserve Bank is conscious that they can't just cut endlessly in an effort to get interest rates ever lower. They've got to ensure that we still attract some foreign investment.
Thanks so much for your input there. Stanlib Chief Economist Kevin Lings joining us there via Skype.